I started from a whole lot of nothing. Back in 08, 09, I was making $8.75 an hour with a net worth now at this point in time. And in early 2024, I officially hit $10 million plus net worth. Stocks allow for unreal returns that you could never even dream of in real estate investing. Expenses is a simple game. Live under your means. I don't care if you make $50,000 a year, $200,000 a year, $200 million a year. You need to live under your means. I have 3 stocks that I've been invested in over the years, and those 3 stocks made me over 10x. This is why Palantir just is in this situation where they just have to keep the revenue growth just in such an insane place. Go ask Elon Musk about all the mistakes he's made over the years. Go ask Jeff Bezos about all the mistakes he's made at Amazon over the years. Go ask Warren Buffett about all the bad stocks he bought over the years. All things are possible in this world. If some guy can climb to a $342 billion net worth and $215 billion, you can climb to $10 million net worth. How to scale to a $10 million plus net worth. That's what we're going to get into in this video here today. I'm going to lay out the full blueprint for you. I don't care if you're watching this and you have a $5,000 net worth right now, a $500,000 net worth, a $5 million net worth. I'm trying to lay out the blueprint so you can hopefully achieve this sort of net worth where you get to an 8-figure plus net worth. Now, the great news is I've done it, and I started from a whole lot of nothing. Back in 08, 09, when I started in this game, I was making $8.25 an hour, $8.75 an hour with a net worth of maybe $1,000 to my name, about $1,000, and that was about 17 years ago now at this point in time. And in early 2024, I officially hit $10 million plus net worth. I didn't make a big video about it. I didn't even tell anybody, to be honest. I kind of kept it on the DL, but I did hit it, and proud accomplishment when you come from, where I came from, which was a whole lot of nothing. Okay. Today's video, this is what we call a gem dropper here on the channel. If you're an OG subscriber, you know what a gem dropper is. I'm not here to entertain you today. I'm here to just lay out a blueprint, teach you how this is done. So hopefully you can adopt some of these in your life and get to that sort of level over time. And that's what we're doing. There's one thing, and there's one thing only I need from you here today. And I need you to just please just hit that thumbs up button. That's all I ask for this video here today. I've been prepping it for hours, thinking about it, recording it for you guys. Only thing I need from you is just smash that little like button, that little thumbs up button. Additionally, if you want to see more of my content in the future, make sure you're subscribed here to the channel. We're now well over 900,000 subscribers here on the channel. I appreciate each and every one of you for being here. Number 1, if you want to get to this sort of level, 8-figure plus net worth, you must know your why. Why are you doing it? You must have a reason. If you do not have a why or several whys, this is not ever going to be possible, essentially, right? You must have whys. Every single person that achieved this sort of net worth, unless they won it through the lottery or something like that, every single person had a why. Why they were doing this, why they were trying to climb these sorts of ranks, because let's be honest, when we're talking 8-figure plus net worth, that's less than, 1% of the population? So you're in a very exclusive club. Why are you trying to get there, right? I'll tell you my whys. I have 3 parts, and I think because I have 3 parts, it kind of keeps me going and on this journey, okay? Number 1, I love giving back. I love giving back. One of my big whys that I started way back when I had $1,000 net worth is I remember hearing about Warren Buffett, and I was also studying a lot of Buffett back in, this is like 2008, 2009. He had what's called like the giving pledge, and his plan was to give away like 90+%, or if not 99% of his net worth when he died to charitable causes and those sorts of things, right? And I always looked at that as like, that's amazing, man. Like, you can get to live a great lifestyle while you're here, and then when you're on your way out, be able to give back to a lot of people and help out a lot of people. I think that's an amazing thing, right? And so I love to give back personally. Like, I'm the type of person that if it's Christmas, I get more joy out of giving presents than getting presents. So, and everybody's different. Some people, their biggest joy is like they can't wait to get the presents, right? Some of us, we get more joy literally out of giving the present and seeing that person say, oh my gosh, like this is amazing. Thank you so much for this. Like, so I love that. This year, just this month alone, I've given 5 figures plus to different Las Vegas organizations, charitable organizations and whatnot, to help out, because I live in Vegas, to help out the community and whatnot in several different ways. And I love that stuff, man. Like, it feels great. It feels great. And without achieving a lot of money, you can't do those sorts of things, right? You might be able to donate your time, but as far as like coming in with, sending $5,000 here, $10,000 here, like you just can't do that, obviously, if you don't have money like that, right? So I love giving back. That's a huge why for me. It's bigger than just me, right? And I think sometimes if you think in terms of like beyond just yourself, it can matter significantly in actually getting yourself to a mental place to keep putting in this work to get here, right? Number 2, I love beautiful things. I absolutely love beautiful things. And guess what? A lot of beautiful things in this world, you got to have money to get them, right? And I get so much joy right now. I'm building a new house right now that overlooks the city. Every detail of that house, I'm thinking through the side yard, the backyard, everything. I love like doing a project. I get so much joy out of that. I love going to a nice resort that everything's been thought through in terms of the architecture and how they're laying things out and the service levels and the experience. I love that, man. I absolutely love it. I love great food. A lot of great food is very, very expensive in this world, right? I love those sorts of experiences. So that's another thing that kind of keeps me moving in this direction. And keep in mind, where I grew up, it was, let's just call it rough area, right? And then getting out of there and kind of moving in the middle class, kind of get to see like, oh, this is achievable. Like this is achievable. Like I see how my family, we were in poverty, then we climbed to the middle class, right? And you kind of get to see and get your eyes open a little bit about like, you can keep going in this game. Like you can get past that middle class and go above that, right? And you can achieve those sorts of things, whether it be certain types of vacations or certain types of cars you want to drive, certain types of watches you want to have, certain types of homes, all those sorts of things. It is achievable. You got to have the game plan to do it. You've got to grind and put in the effort to do it, but you can absolutely do it. It's very, very possible. But I love beautiful things, man. I love beautiful things. Number 3, scoreboard. So in high school, college, I played a lot of sports. Football, started running track, did that in college. What ends up happening with a lot of people that do sports is after sports are over, which they always come to an end, even if you make it pro, you make it to the big leagues, it's still coming to an end at some point in time, right? A lot of people lose that competitive drive. They lose the scoreboard mentality, right? That competitiveness and those sorts of things, right? I had a viewpoint of like, I like to run the numbers up because it's like a big scoreboard and it's fun to me. It's fun. It's keeping that competitive nature. It's like, how good can I get, right? How much money can I get over time? It's a big scoreboard and it's fun to me. And some people, they look at money as evil. They look at money as bad, right? Those people probably aren't watching this video, by the way, because this isn't their type of video. They have no interest in climbing a $10 million plus net worth, right? But those people of that mentality, I can never help those folks, right? They're in a whole different wavelength, right? But for the people that do not think money is evil, they think money's good. They think, creating opportunities for people. They think, it's a great way of living versus instead of walking around hitting each other with spears to just get a piece of meat, right? We can make money and sell each other products and services. It's an amazing thing. So scoreboard's important, keeping that competitiveness, right? Keep the juices flowing. I'm a male. I'm competitive. I love to feel that sort of drive of like, I'm going after something. I'm trying to achieve something. I have a goal here, right? I love it. But the moral of the story is here, folks. Your whys might be different than my whys, and that's perfectly fine. I will not judge you for your whys. If your whys are because you want to, buy every expensive bottle of wine in the world, cool. Like that, do you. Like, you know what I mean? Like, do you. Whatever your why is, you want to come to my city, Vegas, where I live, and you want to just have the craziest vacations all the time and gamble your butt off, you do you. I'm not going to judge you. That's your why. It's your life to live. It's not my life to live, as my life is not your life to live, right? But know your whys. If you do not have your whys, you can never climb the ranks in this. And if you have several whys, now we're really talking. Now you're well on your way, okay? Next up here, you got to figure out, are you going to do stocks? Are you going to do real estate? Or are you going to do both? This is a very important next key. Now, for me personally, what I focused on for my first about 10 years in this game of investing and building wealth, I focused on stocks. Why? Real estate to me was difficult. I didn't know how to get into it. Stocks I understood very early on, like, oh, okay, I'm buying ownership in a business. I understood also the compounding of your money and the great opportunities you can get and those sorts of things. It was much easier for me to wrap my head around stocks. And then over time, after probably about 10 years into the game and climbing the wealth ranks, that's when I bought my first property. I bought my first property, then I bought my second property, I bought my third property. So now I have 3 properties. 2 of them I rent out, 1 I live in. Building a new property right now. It's going to be magnificent. And then the current property I live in, I haven't decided yet if I'm going to rent it or sell it. Kind of leaning a little bit toward renting it. I don't really like to sell real estate. I'd much rather keep it, have it appreciate over 5, 10, 15 years, right? And then maybe sell it off down the road. So that's how I play the game. That does not mean that's how you got to play the game. Maybe you're going to go straight to real estate. Maybe you're going to go straight to stocks. Maybe you're going to do both from the go, or maybe you're going to play it like I played it, where you're going to focus on stocks early on. And then as you climb to bigger net worth with a portfolio, then you buy your first property, your second property, your third property, and you kind of play that game over the years and build up a real estate portfolio as well. Now, not a lot of people understand the big difference. There's really 2 big differences between real estate investing and stock market investing. There's more than that, but I'm just going to run you through the biggest that are way overlooked in regards to understanding why real estate investing matters and why stock market investing matters. Okay, real estate, listen. Real estate allows you to leverage your money in a way that you cannot with the stock market. Now, here's the thing you got to understand. In the stock market, you can leverage money. You can go on margin. It's a horrible idea. It's a tragic idea. And more times than not, it's going to end horribly. Real estate almost never ends badly unless you get way over leveraged, where you go too crazy and you got too many loans and they're at too high of interest rates and it's, you just go insane with it. In the stock market, you don't even have to go insane with it. You can end up in a lot of problems because when you leverage money in the stock market is so volatile that all of a sudden, if the market sentiment shifts and all of a sudden people go very bearish, you can get margin called. Next thing you're getting liquidated. That does not happen in real estate unless you're way dramatically over leveraged and the whole housing market crashes or something like that, right? Which that's happened once in the last 100 years essentially. As far as the stock market going down, literally the stock market will tank randomly pretty much every 2 to 3 years. You'll just get a massive downward cycle. And you got to figure 2 out of every 10 years you're going to go through a crash, right? It's just what happens. It could be like a 25% crash in the market. It could be like a 50% crash in the market. You're on margin, you're leveraged, you're done. You're done, man. It's over. It's game over, right? Real estate, you get to leverage your money. So think about it like this. You're going to buy a $500,000 property, right? You put down, let's say you have to put down 20% on that, so you put $100,000 down. Now, if it's your first property, you might be able to put 3% down or 5% or something like that, but we're just taking the 20% example, okay? So you put $100,000 down on a $500,000 house, right? Let's say over the next 4 years, that house appreciates to $600,000. So you buy a house in 2026, $500,000 house, right? And let's say 2030, fast forward to 2030, that house is now worth $600,000. Guess what? You just doubled your original investment. Because now you're sitting on equity of at least $200,000. You're going to be sitting on even more than that because you paid off part of the mortgage as well over that 4 years. But you're going to have doubled your original investment. So that's the thing you understand. In the stock market, you need a stock to double your money, right? If this guy put $100,000 into a stock and, that stock went up to $600,000, now he's sitting on, as far as the position size, you need $500,000 to put into it to then appreciate the same percentage, right? In real estate, it's just you get that double there. It's beautiful. You need a stock price to double to make that same amount of money. So there's a whole different ball game when you're talking about real estate. Now, where the stock market's beautiful is it allows you for unreal returns that you could never even dream of in real estate, essentially, right? In real estate, you're not going to magically your property you're going to buy. I don't care how run down it is. I don't care in what hot city it is. You're not 10xing, 5xing, 20xing your money in, a matter of a few years, right? In the stock market, you can do that. So stocks allow for unreal returns that you could never even dream of in real estate investing, right? So for instance, I have 3 stocks that I've been invested in over the years, and those 3 stocks made me over 10x. One is Elf Beauty, that's a 10x plus. One is Tesla, that was a 20x type stock. Palantir is a 20x plus stock, right? And those are all just investments of mine since 2019. And you don't always need to run for a 10x. Look at Meta, for instance. Meta's a 459% gain. We've made $846,000 on that stock. $846,000. And if you look at the PE ratios of it, the stock actually screams undervalued right now. So it's not like some sort of thing where it's like, oh my gosh, Meta stock's a big bubble right now. That's the only reason you made 846,000. No, Meta stock's significantly undervalued right now on a mathematical basis. So made 846,000 and like we're still looking really, really good. This is going to eventually hit $1 million plus gain, a $1.2 million gain, a $1.5 million gain, all without having to necessarily 10x. Is absolutely beautiful, right? And so do keep that in mind, ladies and gentlemen. What are you going to do? Are you going to do stocks? Are you going to do real estate? Are you going to do both? I would usually, what's my advice here before we get in the next thing? What's my advice? My advice, get good at one and then start putting more effort into the other. Make sure you get good at one. Like I've seen most of the people I know in real life that have climbed to that 1% category in regards to net worth, in those $10 million plus net worths, they usually focus on one first. So I know some people that focused on real estate first. They built up a real estate portfolio, 5, 10 properties, and then they actually started going hard on the stock market. I know other people that did the inverse. They focused on stock market, including myself, first, and then they got more and more focused on real estate as they went along, right? But I would always try to study both, but put in more effort toward one first over the other. Maybe it's stocks, maybe it's real estate. Like I said, they both have advantages, disadvantages, right? We're not going to get into depreciation. I don't want to get into all the nitty gritty stuff of real estate and stocks and capital gains. That's not what this video is for. This is for big picture blueprint type stuff here today. But the moral of the story is focus on one more for the first 5, 10 years, then go more toward the other one over time. Okay. Next up here. Okay. So you must understand, you probably heard this saying before, it takes money to make money. Okay. Income versus expenses is very, very important, right? Your focus needs to be on income more than expenses. Expenses is a simple game. Live under your means. I don't care if you make $50,000 a year. I don't care if you make $100,000 a year, $200,000 a year, $200 million a year. You need to live under your means. It's just a simple way of spending, you got more at the end of the month, you got the more at the end of the week, you got the more at the end of 2 weeks than what you spent on all your expenses. And all your expenses is everything, right? That's taxes, that's your mortgage or rent, that's your car bill if you got one, that's going out to eat, groceries, health insurance, all that stuff, okay? That is very, very important. But income is where your actual focus needs to be heavily. I see way too many times people are focusing on this and oh, you know what, I'm going to give up date night with my girlfriend or my wife because, it costs money. And I'm like, dude, what are we doing here? No. You can't just stop living life. Just, focus more on this. Because I'm like, there's so many talented people out there that could, if they focus way more on this, they wouldn't have to stress about this as much. That's very, very important to understand. I'll put it to you like this, okay? I said, what's the difference? Let's say you could invest $5,000 a year, right? And you got a 15% CAGR on that money over 30 years. Versus, let's say you were able to invest $100,000 a year for the same amount of time, the same percentage of CAGR. Do you know what the dollar difference is in what you'd have after 30 years? It's $41 million. $41 million. This is why, trying to put all your attention on am I going to save 20 cents at the grocery store buying this bread versus this bread? It's not the most valuable thing your brain could be spending on. You got to understand, your brain can do unbelievable things. Unbelievable things. You're actually very, very intelligent. It's incredible. If you focus that attention and time on making money activities, oh my gosh, you'd be so much better off. And I know so many people that are focused on the coupons and I'm never going to spend at Starbucks because of this. And I'm like, oh my gosh, if these people just understood, they have so much more income potential than they know what to do with. And if they focus more attention on that rather than the expense side, I used to live that life a long time ago of focused on the expenses more than the income. And it's brutal. It's brutal. And it's a scarcity mentality type way of thinking, right? Focus more on the income. That's when we're really going to be talking about running the numbers up. There's so much of a difference. If we could have ran this number of, $5,000 versus $10,000 and you'd still be shocked at the difference in, what you could have there. So getting your income up, it's way less stressful, way more fun, and it's very, very possible, okay? Now, Next up here, work with urgency. Do not get sloppy. I thought this was a perfect picture to kind of illustrate this. All these things kind of next to each other here. Okay, let me explain this. This picture was done for me in middle school. My art teacher in middle school basically drew this picture in 2.5 minutes, way back in 2003. That's how I used to dress back in the day. I would have my hair up like a crown. I'd have a little fake silver necklace on, t-shirt, cargo pants, pair of shoes with no look socks. That was my vibe back then, right? And might still be my vibe today. I don't know. But the moral of the story is here. She drew that picture in 2.5 minutes. At 1.5 minutes, 90 seconds in, I remember looking at that and being like, this is not going to be anything like me. And then all of a sudden, after about 2 minutes and 10 seconds, it was like, oh my gosh, what the heck? How's she doing this? Like, it's starting to actually look like me. And by the time she was done, 2.5 minutes, she drew a picture that I'm like, dude, that's me. Like, how did she do that? You got to work with urgency, but you don't want to get sloppy. And so I thought it was perfect because the roulette wheel's right here, right? And too many times people start getting impatient. They start getting sloppy. They start gambling their money around because they want to get to the next rung, whether that rung is 100,000 to 200,000, 200,000 to $500,000, right? $500,000 to $1 million, $1 million to $2 million, right? $2 million to $5 million. They get a little impatient and they start getting sloppy. And next thing you know, they go backwards. And the big thing you want to avoid is going too far backwards in this game. You go too far backwards, it sets you way behind the ball, and then it makes it that much harder to climb to, if we're talking $10 million plus. So work with urgency, but do not get sloppy. That's so vital, okay? Next up here, listen. Mistakes. If you're playing big money games, you're trying to climb the ranks, you're gonna make mistakes. It's a guarantee. You're going to make mistakes. It's the cost of doing business. It's no biggie. Don't stress about it. If you make mistakes constantly, we got a problem. But if you make mistakes from time to time, you buy a bad real estate investment property, you buy a bad stock, you lose money in it, you sell too early, whatever, cost of doing business, I don't even stress over it. I've never stressed over it because I understand it's the cost of doing business. No one in the business game, investing game, has gotten through this game without mistakes. You could go down the billionaire list. Go ask Elon Musk about all the mistakes he's made over the years. Go ask Jeff Bezos about all the mistakes he's made at Amazon over the years, right? Go ask Warren Buffett about all the bad stocks he bought over the years, right? And it's perfectly fine. Just understand none of these people are perfect. They've all made tons of mistakes. They could probably spend a full lunch with you or a full dinner with you just running through. Like you could have a whole 7-course meal and they could explain to you all the different mistakes they made over the years and how it cost them money or cost them opportunity and this and that. It's the cost of doing business. People sometimes get embarrassed by this. Like, oh my gosh, if I buy a bad stock, I've been on YouTube since 2016. I bought some bad stocks. Some didn't work out, right? Some worked out way better than I ever thought, and most did work out, but some didn't work out. Am I ashamed? Am I embarrassed? Absolutely not. It's the cost of doing business. You're like, how? Oh my gosh, you picked that bad stock. Remember that one? How can you not be embarrassed of that? It's the cost of doing business. Did you forget the other 10 that did work out? Did you forget that one I made life-changing money on, and that one I made life-changing money on, that one I made life-changing money on, that one I made life-changing money on, right? And so cost of doing business, you're going to make mistakes. It's fine. Get up, dust your shoulders off, and let's go, baby. We don't have time to dwell on the past. It is what it is. It is what it is. If that's just why I think everybody should play sports. If everybody played sports and tried to do it on a high level, they would understand the game of playing mistakes. When I played tackle football for 5 years, guess how many mistakes I made? Either on plays or in practice? 1 billion. Are you kidding me? I made so many mistakes. Cost of doing business. Cost of doing business. It's just what it is. And that's what life's also about. A big component of what life is about. It's about making those mistakes and dusting your shoulders off, picking yourself back up. Understand you made a mistake. Putting that in the back of your head. It's way back there somewhere, right? Oh yeah, I remember that happened. Moving on and making sure you don't keep making the same mistake again and again and again, right? It's life, man. That's life. And so cost of doing business, no biggie. Don't stress about it. Don't freak out about it. It is what it is, okay? If you're in this game for a long time, you're going to make mistakes. This is no other way of playing. Imagine you're investing for 40 years in the stock market, you know how many stocks you're going to pick that probably didn't work out or way underperformed, or you should have put money in this other stock instead of this stock? This is fine. It's a cost of doing business. It's a cost of doing business. Next up here, okay, when you're choosing people to work with, choose top quality. Pay up. Pay up, okay? By the way, if you want to follow me on X, I have an X page. You can always look in the description area. I do have that down there if you want to follow me on there. Pay up for top quality people, okay? So, for instance, if I'm looking for, let's say I'm looking for somebody to do my taxes. I want somebody that has maybe worked for the IRS before. Maybe they have a lot of respect at the IRS. Like maybe they have a lot of connections. I want somebody that's top quality. I want somebody that has a lot of respect, right? If I'm looking for a lawyer, right? Depends on what I'm looking for. Let's say I'm looking for something securities related, right? I might go for a top quality lawyer that maybe used to work for the SEC or work for other big regulators and has connections to everybody, right? Like I'm going to think in those sorts of terms. I want top quality. I want somebody that knows inside and out everything, right? Like that's when we're talking about top quality. If I'm thinking about like, I want to hire developers to work on a project for me, right? For something website related or software or something, right? I'm going to be looking for people that have great experience, have done great things over time, and have proven themselves, right? I've gone the route of trying to go the cheap way out, trying to bet on people that weren't proven. It doesn't go well, ladies and gentlemen. It doesn't go well. I did that several times on my climb. We talked about mistakes. I made plenty of mistakes over the past 17 years. And one of them was trying to think about like, I'm going to bet on somebody that hasn't proven themselves. Oof. It usually ends bad. It usually ends bad. Pay up, pay the big bucks for people that are top quality. And oh my gosh, it's going to be the best investments you ever make, man. Pay up for top quality, way better than trying to go cheap. No. Next up here, you must understand you've got to stay in abundance mentality. There's scarcity mentality and there's abundance mentality. And this is actually on a spectrum, okay? So think of it like this. You've got scarcity mentality over here. You have abundance mentality over here, okay? Some people are so far in abundance mentality, it almost gets unhealthy because they just are such like risk takers because they just think everything's going to the moon, and like you don't want to be quite all the way to this extreme. On the flip side, you got scarcity mentality. Some people are so scarcity mentality they can't spend any money doing anything. They're like, are always going to live in poverty. They're never going to be able to spend anything. And like, from the time they're an adult to the time they pass away, like they can't ever do anything, right? You don't want to be there. That's a brutal place to live, right? But it's a whole spectrum. So people that are closer to abundance, you have people that are closer to scarcity. You want to be closer to this side over here, the abundance side, okay? That is where it's at. You've got to have a positive outlook on life. Extremely important. You got to understand there's no limit to the amount of money in this world. There never will. The amount of wealth in the world is constantly climbing. The amount of dollars, euros, everything in this world is constantly climbing. The amount of debt in this world is always climbing. The amount of net worth in this world is always climbing. It's always going up, right? The best companies in the world, where their revenues go despite whatever's going on in the world, up, 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 up. Have abundance. There's abundance in this world. There's no shortage of money. There's absolutely no shortage of money. The more you get around money, the more you start to realize, oh yeah, like there's no shortage of money. Like there's so many people out here with so much money that I could sell products and services to, that I could do this, that I could do that. There's no shortage of money, right? And I think that's why a lot of the richest cities stay the richest cities, and so many people have incredible success in those cities because they're around that sort of abundance. If let's say you're in Silicon Valley, I just think it's a lot easier to be successful in tech and maybe become a millionaire, multimillionaire, billionaire, somewhere like that, because guess what? You're around so much abundance. There's so many people doing it on a high level that just raised money for their company at $150 million valuation. You're like, oh, dang, like that was nothing 18 months ago. And now they're at $150 million valuation, right? You think differently. You start growing that abundance mentality. If you're in poverty, right? Let's say you're in a small town. It's a very poverty-ridden area, and no one has money that no one around. You never go to areas that you see abundance. You see, just nothing but scarcity. Oof, like that's not a good place to be. I'm sure if I stayed in the hood where I grew up in my early years before we moved to a middle class area when I was, getting ready to go into middle school, I'm sure I would have probably had scarcity mentality forever. There's a good probability of that, right? It's natural. It's very, very natural. But since we then climbed out, my dad had his pool business. I would help him all summer, every summer when I get out of school, right? Since I was a little kid, all the way throughout the years. We moved to the middle class. I got to see we stepped up a level. All of a sudden now people can afford to buy a new Tahoe, right? All of a sudden people can afford an Escalade. Like that still wasn't like, oh, people are driving Lamborghinis and Rolls Royces and stuff like that. But it was like, that guy just bought a new F-150. Like, oh, that person just, put $10,000 into fixing up their front yard. Oh, that person just spent $50,000 putting a pool in their backyard. You start to we're growing. You start to go into that more abundance mentality, right? And then as you see more success, it's easier and easier to get over to there. And just, you just got to keep climbing and keep taking your mentality to a place where you're in that abundance and then stay in that abundance. There's always going to be so much fear mongering out there, so much negativity. Listen, man, I don't care what's going on. You know how many rich people are still rich? A lot. And in my city, I live in Las Vegas, as I probably previously mentioned, right? Wynn and Encore here, high-end properties that really cater to that top 10% of wealthy, top 10% of income earners, and especially the top 1%, right? It doesn't matter what's going on in the world. Their cleanliness of their property is always going to be top tier. Their service levels are always top tier. They're not stressed about, does our customer have money or not? They always have money. They might have less money, but they still got so much money, right? A $50 million customer that has their net worth go down to $35 million is still worth $35 million. So the moral of the story is, folks, stay in abundance mentality. Very, very healthy, okay? Next up here, you got to keep putting in the work, right? When other people are sleeping, I'm 2 conference calls deep. 2 conference calls deep. You must understand you got to keep working and working and working. There's no magical cheat code where you don't have to put in the work. Whatever you want to be good at, you got to put in a lot of work, right? Like, I don't know what else to tell you. You want to do the stock market? Okay, we can do the stock market. You got to learn all the stuff you need to learn about financial statements, about running valuations, about P ratios, about how different companies are valued, all that good stuff, okay? And then you got to actually put in the work. You got to listen to conference calls. You got to research companies. You got to spend hours researching companies that you're probably never going to buy. That's the cost of doing business. There's no cheat code to say, oh, you want to be worth $12 million? Oh, that's easy. No, it's not how this works. You better put in the work. I don't know one person that climbed to 8-figure plus net worth or even 7-figure plus net worth that didn't work extremely hard. Doesn't exist. Doesn't exist. You've got to put in the work. Keep working, right? That's extremely, extremely important. Next thing you must understand, all things are possible, okay? If you look at the richest people in the world, what are you going to find? You're going to find they're all different individuals, all from different backgrounds, all from different childhoods, all in different companies, doing different things, right? All things are possible in this world, right? If some guy can climb to a $342 billion net worth and some guy can climb to a $216 billion net worth and $215 billion, you can climb to $10 million net worth. You can absolutely do it. Like, this isn't a video on how to become the richest person in the world and become Elon Musk, right? How to scale to a $342 billion net worth. This is how to scale to a $10 million net worth. We're not even talking these sorts of levels, right? So just understand, if these guys are accomplishing this, you can get there. You can absolutely get to a $10 million plus net worth. It is very, very possible. Do not limit yourself. Do not have limiting beliefs. No. It's very, very possible, okay? I hope you got some good value out of it. Take these steps, implement them in your own life, and watch yourself grow and grow and grow over the next 5, 10, 15, 20 years. It's going to be amazing, okay? If you are looking to take your investing game up to a much higher level than where you're at, the pinned comment down there, click on that. Apply to join my private stock group. That is access to all of my premium courses. Become a master of stock market, millionaire playbook, stock options mastery, dividend investing mastery, financial statements mastery, my valuation mastery to learn how to properly value companies, access to our exclusive Discord chat with so many successful people, the type of people you really want to be around, 6-figure, 7-figure, 8-figure investors, right? Access to 1000xstocks.com. You get your Steel membership cards, sent to your house when you join us in there, which are absolutely beautiful, and all that good stuff. Play this game on a high level, okay? Major developments in regards to where the market's headed from here. Major developments on several different stocks we're getting into here today. Public count up $31,000. Congratulations to everybody out there making a little bit of money. Some big movers out there here today. EL stock up 4.5%, about an $8,200 move to the upside. That stock's now up 54% for us. Shh, it's a sneaky mover. Honest up over 4% here today. Nike up 3.88%. Palantir with a very good day. We'll get into Palantir in this video. American Express up over 3%. Cheesecake up over 3%. Celsius up about 2.5%. 5 core subjects we're going to get into in this video here today. Okay. First one is the Fed. No one's paying attention to the important thing that happened with the Fed. Like, okay, they lowered interest rates today. Big deal. There's actually something very significant I need to show you that's going to matter in a major way moving forward and how this moves the market, okay? Second thing is, we're going to talk about a company that could go bankrupt, and it's kind of shocking because you would have thought this company has never been in this position a year ago or a few years ago. Third subject we'll get into is Adobe. Major developments in regards to Adobe. Their earnings just hit. I'm going to take you through what's going on there, some very exciting things. Fourth, AMD. There was a significant thing that happened in Oracle's earnings regarding AMD that I don't think anybody paid attention to, and it's extremely important for the future of AMD, okay? Fifth thing we're going to get into this video, SoFi, Palantir, major news in regards to those. One thing only I need from you guys, busy action-packed video. I just need you to hit that little thumbs up button. If you could just make that little button glow, that would mean the world. Thank you to everybody that's already done that. Make sure you're subscribed here to the channel, okay? 2 pieces of housekeeping before we get into this video. One is, if you're looking to apply to our private stock group, private wealth group, get access to all that, all my course curriculums, become a master of stock market course, millionaire playbook, options mastery, dividend investing mastery, all that good stuff. There'll be pinned comment down there today that is closing to new members in 5 days. So do keep that in mind. And then we'll open it back up at some point in time in 2026 to new members again. But that's closing in 5 days, and then no more new members will be allowed in there for quite a while, maybe 1 to 2 months. Okay. Second piece of housekeeping we're going to get into here today, before we get in this video, is there's a huge controversy regarding YouTube going on right now. Okay. I'm sure if you're into the YouTube community, you're already aware of this, but basically AI is like banning channels, like scrubbing videos, like it's just going completely insane and not even giving people good reasons. It's a mess, okay? I don't even need to get into all the details in regards to it, but even AI took down our video on the reaction channels. Jeremy Lefebvre Makes Money. It took that down yesterday for no reason, just takes it down. And so it's a huge, massive issue. It's all over X right now. Even a lot of the biggest YouTubers are starting to talk about it. It's going to get much bigger from here. So I just want to let you guys know I'm now starting to post all of my videos also on X. So if you ever want to follow me on X, I always have that linked in the description area down there. That way you guys still have another outlet to watch my videos for free in case this YouTube AI keeps going crazy and just banning videos and just taking them off and just deleting them. It's out of control. And so anyways, I'm posting them still on X. That way you guys still have another place to access them for free. So yeah, there is that going on. And by the way, just so you know, yesterday's video, that video was up for about 3 hours or 4 hours before the AI took it down. So just make sure, I know a lot of you guys work busy jobs. I know a lot of you guys have your own businesses. So it's not like you can watch it as soon as my videos come out. But if you're having an opportunity to watch my videos within that first hour or a couple hours of it being out, it might be worth your time, because you never know. Once YouTube takes it down, then you can't get it back up. It's insane. There's no humans to talk to. It's a mess. So anyways, I want to let you guys know about that. Okay. Alrighty. First subject up here, the Federal Reserve. Okay. So something significant happened, and no, it was not the rate cut today. That was everybody knew they were going to cut rates today. Big deal. The key things that happened were, one, in regards to 26, they're indicating only one more cut. That's pretty significant because I think a lot of people were kind of expecting several cuts, right? So now keep in mind that can move around. This dot plot the Fed will put out there, it moves around all the time. So don't just assume, okay, the dot plot shows one reduction, 26, that's what we're having. There's a multitude of things that could happen between now and 3 months from now, 6 months from now, 12 months from now, that could change that. So that's something to keep in mind. This is much bigger though. In addition to the rate decision, the Fed also announced it will resume buying Treasury securities. The central bank will start by buying $40 billion in Treasury bills beginning Friday. Now, my guess is how this is going to work, is the Federal Reserve will buy treasuries and buy treasuries and buy treasuries, and treasury yields will start going down, 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 down. That's significant. As treasury yields go down further, that could mean more money comes into the stock market, because a lot of people have been very comfortable with getting, 4% plus from treasuries, which has been for the last several years. And there was at one point you could get even over 5% for treasuries, right? So a lot of people are kind of like not that enthusiastic about like buying stocks, because they're like, dude, I'm just sitting over here collecting 4 or 5% right now. I'm chilling, right? Well, if the Fed's going to start buying treasuries and those yields start to go down, suddenly you can't get 4% anymore. Next thing you know, you're getting 3.5%, 3%, right? Savings accounts that were yielding, let's say 3.5%, 3.6%, right? All of a sudden those start to yield 3.1, 2.9, 2.7. People start looking and they're like, okay, like might not even be keeping up with inflation at this point in time. If you can give somebody 4.5%, most people are going to look at that and say, okay, I'm beating inflation, I'm winning. If all of a sudden you start giving people 2.7% on a savings account or under 3% on a treasury, people start saying, I think I'm losing to inflation now at this point in time. I better get invested in the market. That is significant, okay? Additionally, this is something very important to keep in mind, okay? The Federal Reserve announced that today, right? This is a major change, because the last time they were doing quantitative easing, that was the Fed bought massive amounts of treasuries and mortgage-backed securities to support the economy, was during Rona, right? 2020 to 2022, that was a huge, like, they were just buying everything in sight, right? And that was artificially keeping treasuries yields down significantly. And that's why you could get a mortgage for 2.8%. Like, it was insane, right? Now, obviously, inflation goes out of control. So starting in 2022, they flip. So 2022 through basically this week, right? They were in quantitative tightening mode. Fed allowed bonds to mature without reinvesting. Quantitative tightening, shrinking its balance sheet, right? But now we're ending quantitative tightening, and the Fed will begin with purchasing treasury bills, okay? So this has ramifications for a lot of different things. Now, a lot of people aren't thinking it's going to move the 10-year that much. You know what? Listen, okay? I believe it is going to move the 10-year. I believe the 10-year will be going down over the next 6, 12, and 18 months. I truly do believe that. I believe that I believe the Federal Reserve and the government in general and the current administration, I believe everybody wants to get the real estate market starting to move in 26 and 27. The real estate market is frozen. It's been frozen for years, and that's because obviously mortgage rates went insane, right? Like, we hadn't seen 6 and 7% mortgages in like decades. Like, it's been ridiculous, right? So you had 6, 7%. I mean, I got almost up to 8% at one point in time back a little over 2 years ago, back in, fourth quarter of 2023. So my opinion is they will bring, however they do it, they will get it done, but they will bring that 10-year down. And everybody knows that they want to get that down, right? T-Man wants to get it down, and they'll get mortgage rates, in my opinion, over the next, we can call it 6 to 18 months, kind of in the sweet spot, which the sweet spot, I call that 4.5 to 5.5% for a mortgage. And that will get the real estate market moving again. The real estate market's been dead because so many people, even if they can afford to move, they absolutely refuse to sign their name on a 6 or 7% mortgage, because a lot of adults have never had to pay 6 and 7% mortgages. They're used to 2, 3, 4% mortgages, maybe 5%, not 6 and 7%. So even if they had the money, they're like, I know a lot of people that have the money to move and honestly probably want to move, but they're just not moving because literally they're like, I'm not signing at a 6% mortgage rate. Like, that's not happening, right? If all of a sudden mortgage rates go over the next 6 to 18 months in that 4.5 to 5.5% range, you'll get people moving again, because that's where you used to be at. So when you come from 7% mortgage rates down to 4.5 to 5.5, now it looks cheap, especially when you were there for years, right? So this is something very, very significant. And that's what we have going on there, okay? Next thing up here, a company that could go bankrupt. And then we'll get into Adobe, AMD, SoFi, Palantir, okay? You ever heard of a Cracker Barrel? Well, Cracker Barrel, this was a company that you could count on being profitable year in and year out, right? Nicely profitable company. Only year in recent years they hadn't been profitable was during the Rona year 2020. Obviously, that was a whole freak situation. Like basically every restaurant lost money out there pretty much in 2020, right? But this is a company that was very profitable, doing very well for itself. Then it makes some decisions earlier this year that went, let's call it viral on social media, and it got a lot of their customer base very upset around rebranding their logo, around changing their restaurants, and a lot of people loved the old nostalgic look of the Cracker Barrel, and then they tried to change it to this modern look, and people weren't feeling it, and then they felt like a whole bunch of things. The company went woke. There's like a million things, okay? And so the moral of the story is, what has happened to Cracker Barrel is kind of shocking. Their revenues just went down 6% on a year-over-year basis, and you may hear that and you're like, okay, 6% doesn't seem that insane. In the restaurant industry, your revenue going down is death. You cannot have that happen. And when we're talking 6 percentage points in the restaurant industry, that can take you from a nicely profitable company to a huge money-losing company, just like that. And so what happened here with Cracker Barrel is they were able to bring down some of their expenses, but not nearly enough. And so what ended up transpiring is revenue was down, let's call it a little under $50 million on a year-over-year basis. But look what happened. They ended up taking an operating loss in this latest quarter of $32 million. That's versus an operating income of $7 million in the same quarter last year. So now they're losing a fortune, right? Look at net income. Net income was, they had an income tax benefit that helped them out in a substantial way, right? Because look at their income loss before income taxes, $36 million loss, right? But their net loss ended up being $24 million, helped out by the income tax benefit there, versus $4.8 million in the positive. This is a mess. This is a mess. But you want to know the worst part? You want to know why this company could potentially face bankruptcy? Look at this. They only have $8.9 million in cash and cash equivalents. I know people in real life, individuals that have that much cash. This is not a lot for a big company like the Cracker Barrel that has locations all over the place. $8.9 million, and you're trying to spend a bunch of money doing, like changing this in your stores, your restaurants, and changing that and changing this, right? And you're now taking big losses. What do? You're taking big L's. Your customer base is revolting against you. And you got you're low on money. Like you're really low on money. This is the exact opposite time you want to be taking any risk with your business model. This is a mess in regards to Cracker Barrel. I'm honestly shocked. This stock is not a penny stock right now. Like if there's a stock, like there's some stocks that are under $5 and I'm like, those stocks do not deserve to be there. That's insane. Look at their income statements. Look at their balance sheet. They do not deserve to be under $5. Cracker Barrel, there's a stock that honestly I could see being under $5. I'm like, dude, I don't think people understand the level of risk they're taking in this stock. Again, they might not go bankrupt. They might be able to turn around and get back to profitability, and they might be able to raise money to get through this tough time and all those sorts of things. Maybe that happens. We'll see. Or maybe it doesn't. And if they don't turn around quick here, ladies and gentlemen, it's just math. It's just math. You think they could take much more of these losses? Good luck. That brings me to cake, right? There's obviously a restaurant concept that I buy very heavily, and I bought it for several years now. I'm still buying the stock. I still love this stock. I think it's literally one of my favorite stocks in the market. It was up 3% here today, right? Cake. Look at the difference between somebody like Cake and somebody like Cracker Barrel. Cake's revenues were up 5% in the latest quarter on a year-over-year basis. Net income was up 6% to $32 million in net income. We're talking they're making tens of millions of dollars every quarter, right? $10 million plus in net income a month. Adjusted EBITDA, $72 million in the latest quarter. That was up 12%, versus last year, essentially, right? Additionally, Cake has total available liquidity of $556 million, including a cash balance of $190 million. Not $8.9 million, $190 million. And they're super profitable, right? And that brings me to this point. This next point I'm going to make that's very important. If you can't sleep well at night holding a stock, you can't own the stock. I'm able to continue to buy Cake. I'm able to hold that stock. I don't have trouble sleeping at night thinking about, ooh, Cake, what's going to happen here? If I was holding Cracker Barrel stock, oh, you better believe I'll be sweating bullets right now. I'm looking at that cash balance. I'm like, oh my gosh, I have 8 million. Oh my gosh, they're taking these losses. Oh my gosh, like they're gonna have to dilute shareholder value somehow here, or they're gonna have to like raise more money, or a bank's gonna have to loan. I'm like, what's gonna happen? Are they gonna stop all this renovations in their restaurants? And are their customers even gonna come back? They might not come back. It might get worse. Sales numbers might even get worse. Ooh, I'd be stressing. Cheesecake? That's not stress. It's no stress. Making bank, keep making bank, got bank, at the bank. We're all good, baby. So keep that in mind, folks. Always remember that. If you can't sleep well at night holding an asset, don't buy it in the first place, okay? Next up here, Adobe. So ADBE. What's going on here with Adobe? Their earnings just came out here in the last couple hours. Listen. This is what we call a grade A income statement, folks. Borderline A plus. If their revenue growth was just a little stronger, I probably would have nudged it up to an A plus. It was like I was debating like A plus or A, and I ended up going with A. Total revenue up to almost $6.2 billion in the quarter from $5.6 billion. Gross profit went to $5.5 billion from $4.9 billion. Look at how well they kept cost of revenue in check. $649 million versus $616 the same quarter last year. They did phenomenal as far as keeping cost of revenue in check. And so gross profit exploded to the upside for the company. R&D, they upped that year over year. We can call it 10%-ish, somewhere in there roughly. Sales and marketing was up year over year for the company. We can call it a little less than $200 million there. G&A, they actually brought that down on a year over year basis, which is pretty shocking. So total operating expenses, I thought they kept that in check. It wasn't, it was up on obviously on a year over year basis, but it wasn't out of control, especially considering gross profit grew, what are we talking here? Almost $600 million in a year over year basis, right? Or 550, somewhere around there. Operating income, $2.2 billion versus $1.9 billion in the same quarter last year. Income before income tax is $2.2 billion versus $1.9 billion. As far as net income, $1.85 billion of net income versus $1.68 billion in net income. And then diluted EPS, $4.45 versus $3.79. They're buying shares left and right back, which helps their earnings per share go up at even a faster clip than net income's going up. I love it. I love it. And that wasn't the only good news we got here today in regards to ADB, Adobe. This came out as well 10 hours ago, 9 hours ago. ChatGPT can now use Adobe apps to edit your photos and PDFs for free. Adobe plugs Photoshop, Acrobat tools into ChatGPT. Adobe integrates with ChatGPT. So the moral of the story is here, Adobe is obviously very forward looking here. Adobe is going to continue to partner with a lot of the biggest AI companies, if not all the big AI companies, right? And continue to just make a great ecosystem company. It's a great risk reward profile on Adobe. It's a great risk reward profile on Adobe. Now, I don't know if you guys follow me on X or not, right? Like I said before, it's always linked in the description area if you ever want to follow me there. But I posted this 3 days ago. Looks like about 160,000 impressions here. I said, Adobe will be one of those stocks that suddenly 2X's within a 6-month span, in my personal opinion. And everybody will be like, what the heck just happened? And that's the way I see Adobe. It'll just be one of those stocks that is just chilling. And then when it moves, it's going to be a move. And people will be like, what? Like, what just happened? Right? Like what? Like, this was insane. And, a very similar, it reminds me so much of Google in regards to Google. Oh my gosh, like Google's being disrupted, like they're in big trouble, blah, blah, blah. And next thing you know, all of a sudden Google just, boom, 2X like that. And so, Adobe will be one of those that will be chilling and then it's going to go on a major run in my personal opinion, and we'll see what happens. But it's going to be a whole lot of fun in my personal opinion, right? Next up here, AMD. Then we're getting to SoFi and Palantir. So this AMD situation runs back to Oracle, okay? Now, Oracle earnings came out here after the bell. Now, Oracle, they grew their cloud business very nice year over year, 50%. They grew their software business, 36%. Hardware and services were a little small growth, 5 and 9%. But total revenues went to over $16 billion from 14, so nice growth from Oracle. Nothing crazy, but that's like good, solid growth, right? Now, as far as the expenses, it was a little high. The expenses were up like, they were pretty significant. They were up to 71% of revenue, right? So total operating expenses, $11.3 billion, but a lot of that did come, just so you guys are aware, a lot of that did come from restructuring. So that was a pretty significant number, $406 million there. They also had this like one-off that, in my opinion, really helped the company majorly. Well, it's not an opinion, it's just like math. Look at non-operating income here. This is like a one-off kind of category, right? $2.6 billion. That's usually that line item that usually, if you have some sort of one-off major loss or gain, you slap that in that non-operating income area, right? I mean, almost $2.7 billion is a huge number, right? Especially when it was non-existent. So it made their net income look like it exploded higher, right? 6.1 billion versus 3.1 billion, but keep in mind, almost 2.7 billion of that was that one-off there. So it was a solid report from Oracle. I gave them a B grade here, right? It just wasn't nearly as good as you might have thought once you dig into the numbers a little bit, right? Now the stock's down huge after hours, down like 11%, well under $200. And the thing with Oracle, they always end up somehow underwhelming Wall Street. They always end up doing it somehow. And this one, I think just like, people look at the backlog, the revenue performance obligations are supposed to be huge, right? This incredible number. People don't have faith in it. They don't know if that's true. They don't know if that's going to be accurate, right? They're like, oh yeah, OpenAI is supposed to spend this crazy amount with Oracle, but are they actually? And it's fair questions. It's fair questions because we don't know we don't know what AI growth will be like next year or the year after. What if growth rates slow a bunch? What if OpenAI gets disrupted by Google in a major way over the next few years? Everybody's thought about Google being disrupted by OpenAI and ChatGPT. What if it works in reverse? Like, these are all things you got to consider, and that's what Wall Street's looking at, and they're like, we're underwhelmed. We're underwhelmed, right? And so stock down to this stock is well under where it was back when the announcement came out that they had the massive OpenAI partnership, and OpenAI was supposed to spend hundreds of billions of dollars with them and all those sorts of things. But where does this get interesting from AMD's perspective? Here's where it gets very interesting, okay? So Oracle sold Amphrey because we no longer think it's strategic for us to continue designing, manufacturing, and using our own chips in our cloud data centers, said Larry Ellison, okay? So they sold off that chip side of their business. Okay. This is where things kind of get more interesting, though. He says, we are now committed to a policy of chip neutrality. So not trying to, promote a certain type of chip over another one, right? Like, whoever you want to use, we're going to give it to you. So they got a policy of chip neutrality where we work closely with all our CPU and GPU suppliers. This is where it gets really interesting. Of course, we will continue to buy the latest GPUs from Nvidia, but we need to be prepared and able to deploy whatever chips our customers want to buy. Okay. There are going to be a lot of changes in AI technology over the next few years, and we must remain agile in response to those changes. Such a suspicious statement. Such a suspicious statement, right? Like, how does somebody like myself that's been in the market 17 years and heard, a trillion CEOs say this and that over the years, how do I read something like that? I read it like this. You got to break up with your girlfriend, boyfriend, you're trying to let them off easy, and you're like, of course we're going to still hang out. Of course we're going to be friends, right? Might be true. But it's weird you got to kind of like let them down a little bit like that, right? And Larry Ellison, it sounds like he's basically laying out that our customers, they honestly might want to buy a lot of AMD chips. They might want to use a lot of AMD chips over the coming years, and we have to be ready for that, right? And so the fact that he even brought up Nvidia in that manner was like strange. Like, why do you even need to bring them up? Kind of strange, right? Like, it almost like a shot at Nvidia. It's very, very strange, right? Going to be a lot of changes in AI technology over the next few years. We must remain agile in response to those changes. Almost sounding like people are going to be wanting a lot of chips outside of just Nvidia, and we need to remain agile, ready to basically serve that business up that is non-Nvidia related. Very, very interesting. Which, if you're thinking about like who's that in reference to, it's going to be in reference to like AMD, obviously, like they're the next big dog right after Nvidia, right? And when it comes to AMD and Oracle, this announcement, it came out somewhat recently, right? Oracle and AMD have a major expanding partnership focused on powering Oracle cloud infrastructure with AMD's powerful processors, EPYC CPUs, and accelerators, Instinct GPUs for large-scale AI databases like Exadata, and general cloud computing, with plans to deploy 50,000 new AMD Instinct MI450 GPUs. This is the one that everybody wants. This is the one that's going to blow the top off for AMD's business model, the MI450s, in late 2026 for an AI supercluster, solidifying AMD as a key competitor to Nvidia and growing AI infrastructure market. The collaboration provides cloud customers with a strong alternative to Nvidia, offering better price performance and open systems for AI. And that's very key. Better price performance. So dang key in regards to this matter, right? It's just math. All these companies have been spending a fortune with Nvidia. Nvidia is going to have to compress those margins. Like, that's the bottom line in regards to that, right? To actually compete better with AMD, because we know AMD, the thing is, like, AMD benefits so much from Nvidia. Nvidia doesn't benefit at all from AMD, because Nvidia, first in the marketplace, right? They charge these insane prices. AMD now comes in ready to finally compete in a major way in 2026. They're already kind of competing in 25, and their revenue growth has been very strong, but it's just like it takes it up to a whole other level when the 450s start getting sold in the second half of next year, right? And so AMD is coming in as a low margin company compared to Nvidia. Like, their margins aren't even comparable on the net margin side, right? And essentially, AMD is going to be able to likely up their margins significantly over the next few years. Meanwhile, Nvidia, since they're going to be getting undercut on pricing by AMD, Nvidia is likely going to have to lower price to try to compete harder against AMD in 26, 27, 28, 29. So that's why I say Nvidia is AMD's best friend, and AMD is Nvidia's worst nightmare. That's the bottom line in regards to that, because you're talking about AMD's getting ready to take market share starting at the end of 26 and then especially going into 27, 28. And they're going to likely hurt your margins. It's a double whammy, man. It's brutal. And this leads to Nvidia and Jensen, right? Man has been everywhere the past month. Have you noticed it? Isn't it a little bit weird? It's a little bit weird, right? It's been everywhere. Like, he's on Joe Rogan. Okay. He's in suits doing interviews with all these business channels in a suit. I'm just like, interesting. Like, it's interesting. Change of, how bad are you trying to get across the narrative right now, Jensen? Like, that's what I'm thinking. Like, how bad are you trying to get across this narrative? And we're seeing even more weird stuff where they keep trying to refute these different things. Like, they're trying to refute what Michael Burry's talking about, right? And saying that it's not Enron, and, trying to refute like accounting questions, and then trying to refute that chips are getting smuggled into China, and man, they're just trying to publicly refute all these things. But I don't know. It's getting a little weird, ladies and gentlemen. It's getting a little weird. Now, in regards to AMD and Lisa Su, she's come out and said that basically inference, which is using the models, is going to be a much bigger market, in her personal opinion, than AI training, which training was building these models, okay, for all these different companies, right? Inference is the next wave. While Nvidia dominated the initial AI training phase, Lisa Su sees inference, which is running the models for real-time use, as a next massive growth driver with huge demand from agents, Salesforce, and diverse applications she's talking about. And basically, she believes that inference market is going to be way bigger, and she also believes AMD's actually most well positioned for that. And we'll see over the next 3, 5, 7, 10 years, right, who was well positioned for that. But you got to understand, if Lisa Su has positioned this company the way I think she has, we're going to talk about, a 5 to 10 year runway of growth that should be very, very fun. Very, very fun indeed, right? And so that's me with my AMD shares, man. I'm holding these babies tight. I have no interest in letting those babies go. I got 2,555 shares in the public account. I got massive amounts of shares in other portfolios of mine and private portfolios. I'm going to hold those babies tight. AMD might be the biggest position for me also in the Patreon portfolio. Like, I'm good. Like, I'm not, you could offer me $250 for AMD right now, and I'm not interested. You could offer me $300. If you told me I couldn't buy back, I wouldn't be interested, man. Bottom line with that. SoFi, Palantir, big news in regards to these stocks. What's going on here? Here's it. SoFi announced a new product today. This is another major step in the right direction for SoFi. Introducing the SoFi Smart Card, the best all-in-one account. SoFi Technologies, the one-stop shop for digital financial services, today announced the SoFi Smart Card, the best all-in-one account. The account offers better choice and control over spending, attractive rewards, and a way to build credit history and high interest on savings balances. The Smart Card is exclusively available to eligible new SoFi Plus members starting today. SoFi Plus, that's like a membership model where you have to pay, I think it's like $10 a month. I believe I pay for it, so I get a higher percentage on my savings account, which way offsets the cost. The Smart Card offers the best benefits of checking and savings products, debit cards and credit cards, all in one account. While people use debit cards to avoid paying interest and spending beyond their account balance, they often miss out on rewards and protections typically offered only by credit cards. That's why this account offer matters, right? And they're talking about members will earn unlimited 5% cash back rewards at grocery stores. That's extremely competitive. And all my credit card people out there, which I know there's some, I know at least a few credit card experts, I would call them, watch my channel. Tell me, is that a strong offer? Yes, that is. Like, I know you guys know that. Like unlimited 5% cash back rewards on grocery stores, that's a strong offer. Then they're talking about 4.3% APY on savings balances. Man, and this is SoFi just showing that they just keep the pedal to the metal. I think an offer like this is going to be very successful. I think it's going to be very successful when people find out about this and like, wait, what? Oh, shoot, that actually sounds amazing. And you understand what SoFi is going after. You know, what SoFi is really going after here, listen, they want people to have their checking accounts and savings accounts through SoFi. Once you do that, that's the holy grail in the banking system. That's the holy grail in the financial products. When you can have somebody have their savings account and checking accounts, you have the highest level of trust from that individual, right? They got their actual checks being deposited. Right? Maybe they don't call it checks anymore, but your pay, right? Whether you run a business or whether you get paid from a company, whatever, like if it's going into a checking account, that's your highest level of trust, right? Because that's where you're paying your bills out of. That's where you're living your life off of, right? You got to have a lot of trust there. And then you can have your savings accounts. And then that opens up an immense amount of opportunities to sell you other products, which is what SoFi wants to do. It also wants you to invest through them. It wants you to buy ETFs through them, right? It wants you to get your next car loan through them. It wants you to take out, your next mortgage with them, like et cetera, student loans, all that sort of stuff. And so SoFi just continues to impress me, man. They just keep the pedal to the metal. And JP Morgan said it best. I don't know if you guys got to see what JP Morgan was talking about. I think it was yesterday. This really matters significantly. JP Morgan, the big dog, the one that is the holy grail, the big dog. Everybody wants to be JP Morgan. SoFi would switch to be JP Morgan in a second. Everybody wants to be JP Morgan. Guess what they said? They said this is the most competitive banking environment they've seen since the great financial crisis. He said it's extremely competitive. They just had to take up their expense outlook substantially, several $1 billion essentially. Very competitive they're talking about. And I think it's from companies like SoFi. They're keeping the metal because you understand SoFi's members just keep climbing substantially every quarter. So they're stealing a lot of the next generation. And so, man, I wouldn't want to compete with them. They're tough. They're really, really tough. And so we got a winner. We got a chicken dinner here, right? And so this is another one that I'm up 226% on the stock in the public count, and I'm holding this close to my chest. Very, very close to my chest. I don't care what you offer me for SoFi. I'm not interested in selling them. Not right now, man. Not right now. This company is just, Anthony Noto's just executing on a high level. Whew. Palantir. Wow. Palantir announces a strategic partnership with the Navy, U.S. Navy. United States Navy announced a groundbreaking partnership with Palantir Technologies to deploy Palantir Foundry and Artificial Intelligence Platform, AIP, across the nation's maritime industrial base. The initiative, ShipOS, authorizes up to $448 million to accelerate the adoption of artificial intelligence and autonomous technology across the industrial base. Good. Here's the deal, okay? They got to keep these deals rolling through. They got to keep them rolling. The latest revenue growth from this company was 62.6%. Like, we've pushed the growth rates up so high for Palantir that if and when these growth rates start to come down, it's going to look like what happened to Palantir. You understand that Palantir went from 62% growth to 32% growth. People would be like freaking out. Like, oh my gosh, what happened to Palantir? They fell off. 32% growth would still be great, by the way. But when you're used to 62% now, people are like, oh. So this is why, like, Palantir's got to keep just having the deals pour in from the military side, from the government side in general, and especially from the commercial side, right? Because yeah, you got to keep this party going. And as soon as those growth rates start to decelerate in any significant way, that's where we run into trouble with Palantir stock, right? Here's the deal. 2-year forward P on the stock's 198. Many stocks in the market trade in that 16 to 24 range. So we're not even, we're like in a whole different stratosphere in regards to P ratios, right? If you look at the forward price to sales ratio, 99, ladies and gentlemen, 99. Many stocks in the market trade in kind of the 1.8 to 2.6 range. So this is why Palantir just is in this situation where they just have to keep the revenue growth just in such an insane place, because as soon as that starts to shrink in any major way in terms of deceleration, the stock's ready to get crushed like a souffle, as Elon would say, right? Now, I want to share a message with you guys. It's very important that I posted inside my private stock group back just a couple days ago. I said 17 trading days left in 2025. I think we're down to 15 now. I said usually these last days of a year are upward and quiet. Markets start to die down more and more in terms of volume until just the day after New Year's. Sometimes you can get some last minute tax loss harvesting and some beaten down dog stocks. This is why some stocks will still downtrend in the last trading days of a year, even if the market's slightly uptrending. Sometimes you also get a return chase from funds. This is where fund managers buy up stocks that are volatile to the upside at the end of the year to try and generate positive alpha rate at the end of the year, so their returns can look closer to the S&P 500. If they underperform during the year, that might have been the longest run-on sentence I've ever had in my life. I'm sure my English teachers would not have been proud of that, but hey, English might have never been my best class, huh? Business and accounting were a little bit better. Hope that makes sense. Stocks they might buy are stocks like AMD, Nvidia, Palantir, Tesla, etc. Bottom line is, though, don't get caught up in all the short-term stuff the Wall Streeters do at year end. Stick to your game plan and let the rest be what it's going to be. Great next few weeks to spend time with family and look into some new stocks. And so that's what you got to understand. Like, stay focused on your game plan. Let the Wall Streeters do what the Wall Streeters are going to do. They're going to control whether the stock market goes up or down in the short term. If the Wall Streeters all want to sell, they're going to sell. And the market's going down. If they all want to buy up, some of these risk-on stocks, Russell 2000 stocks, they're going to all buy them. And they're just going to move up. You can't do anything about that. You can ride the waves, right? We're just out here on our boats, riding the waves and having a good time. And we're going to stay focused on what we can control, what we can do, those sorts of things. Okay, ladies and gentlemen. Once again, if you're looking to join my private stock group, we only have that open here to new members for the last few days here. So if you want to get in before we close it to new members, you can do that. Send your Steel membership cards. That's a beautiful private group card. We have our unbelievable 1000X card. We'll send you. And the best one, if you join us on a lifetime basis, the lifetime membership card, can't show you that, baby. That's the black card. It's beautiful. Flipper of a year it has been in 2025, right? I mean, just think about all the drama. Think about all the craziness of this year. Fidelity has us at a 22.2% return over the past year in the public count, so done very, very well, which this should be back-to-back-to-back years where we've absolutely decimated the market overall. Congratulations to everybody out there doing very well for yourselves, especially everybody that's out there crushing the market returns. That's what we're going after in this game over time. Now, AMD stock, this is so close to a double up in the public count now, up $278,000, up 97.5%. It is so close. Not a lot of people understand what's absolutely going on with AMD right now, and it's very important you do so. Celsius Holdings might be the next double up for the public count. This stock we're now up $80,000 on, up 82% on this one. We're looking at Revolve. Revolve's a sneaky double up here, up 137% on the stock. Not a lot of people understand what's going on with Revolve there. Netflix, this stock was $130 plus 6 months ago. Now I'm getting questions about it. People are like, what about Netflix stock? Is this a buy here? The stock keeps going down, $96 here today. 4 core subjects we'll get into in this video. AMD. We're going to talk about AMD right at the top of this video. A lot of people are still very confused about AMD, why the stock is showing so much strength, especially versus Nvidia. what is going on there, what's transpiring, where things are headed. I'll get into all AMD stuff right at the beginning of this video. Number 2, Celsius. What is going on with that stock? Why am I not even remotely close to interested in selling my shares? Why am I actually buying shares right now? I just opened up another Celsius position, another portfolio just on Friday. Why am I doing that? We'll speak about Celsius in this video and the opportunity there. Revolve might be the stock that gets the least attention of any stock I probably talk about. That needs to end. We'll talk about what's going on with Revolve's business model, why this matters so significantly. Netflix. We'll talk about my opinion on Netflix, given that so many people are asking me questions about it and those sorts of things, and the deal and whether it's going to go through or not. I'll give you my perspective on all of that in this video here today. These gentlemen, they're always sleeping in my backyard. And I saw them sleeping today. And I was thinking, because, I don't know, at the guard gates, they let them in to do work on my backyard at like 7 a.m. I thought they had to wait till 9. And, you know, I like to sleep in a little bit because I go to bed really late. And they're always got their wheelbarrows going right by my bedroom. I'm like, so I was thinking about running my wheelbarrows by them while they took their nappy. But I didn't do it. Didn't do it. I'm too nice, okay? I'm too nice. Now, one thing only I need from you guys is I need you just to, if you could just do one little nice thing for me, that's all I need from you. Just hit that thumbs up button. That little thumbs up icon, if you could just make it glow, that would be the nice thing to do for me today. And that's all I need from you. If you want to be subscribed to the channel, you can certainly subscribe. We're well over 900,000 subscribers strong on the channel now at this point in time. And I'm thinking about maybe getting an SF90 back half of next year. If you ever got an opinion on that, let me know on Instagram. My Instagram's always linked in the description area down there. I know a lot of you reached out to me, shared your opinions and perspectives on that. And the exact one I'm looking for is I got a lot of people DMing me, asking me what exact one I'm looking for. This is the exact look of an SF90 I'm looking for in regards to color scheme, interior, exterior. That's the one right there. They actually have one at Las Vegas Ferrari right now, but it's brand new. From my understanding, the guy, he just couldn't afford it in the end. He got the whole thing built, and so they got it down there, but they want 600-something thousand because they'll never discount a new Ferrari. That's like something like, you basically, doesn't matter what's going on in the marketplace, they'll never discount a new Ferrari. And so I drive that off the lot, I lose $100,000. That doesn't sound too good, man. That doesn't sound too good to me. So we'll wait till the second half of next year. Values will likely keep dropping the next 6 to 12 months on those babies, okay? Alrighty, first one up here, AMD. What is going on here, okay? Let me break it down for you, and let me tell you where the stock's headed and what's happening here. Listen, we're so close to a double up here, so close in regards to AMD in the public account, right? This is what we go for. We go for the double ups. Whenever I buy into a stock, I'm thinking about, can I potentially double? Is it realistic for me to double my money in the stock over the next 3 years? That's what I'm actually going for. A lot of people might think like, I'm going for the next 10x or 100x opportunity. No. Like if that comes and there's an opportunity like that, and I think there's an opportunity, like that's great. But that's not what I'm actually going for. I'm looking for opportunities in the market, arbitrage in the market, where I'm like, this stock has a pretty high probability of doubling up or more over the next 3 years, essentially. And that's what I was able to find with AMD. If we think about stocks that I've over 10x'd my money on since 2019, there's been 3 of them. Tesla, 2,000+% gainer there. Palantir, 2,000+% gainer there. And Elf's over 1,000% gainer, right? Now, I bought into Nvidia at the end of 2018, beginning of 2019. I wish I would have held that so bad. But I didn't really understand the business model to a high extent at that particular time. So I made like, I think 30 or 40% on the stock and just cashed and took my profits and ran. But you got to understand, with those type of opportunities, a lot of risk comes with them. Back when I was buying in Tesla, it was seen as a very risky stock. It was a huge money loser. I thought they were going to flip to profitability and all those sorts of things, and they did. And that's great. I made crazy money, but it did come with a lot of risk. Like things could have went wrong. Maybe they never reached profitability, right? Could have been a problem. Palantir, same exact situation. Palantir used to be a huge money loser. I started buying in that stock very heavily in the back half of 2022, right? And then kept buying at the beginning of 2023. Palantir was seen as a riskier stock back then. People didn't understand the business model. Growth rates kept going down. People are like, I don't know about this business model, right? Stock went all the way down to $6. Obviously, things turned out pretty good with Palantir. Elf, that was a $7 stock and some change when I bought into that back in 2019, the public count. There was a lot of questions about Elf. The bottom line was looking rough for Elf. The margins were looking rough. Revenue was looking rough. Like everything was looking pretty bad for Elf, right? I thought they could turn things around. I thought everything was temporary. It was temporary, and Elf obviously turned around their business model in a massive, massive way, right? And so all came with risk. And then Nvidia, I didn't really understand the GPU market that well back when I bought into that. So I was kind of taking a little bit of risk. And once I got a chance to take a little 30-40% profit, and I'm like, I'm out, because I just didn't quite get it at that time. So they all came with a lot of questions, came with a lot of risk. Got to understand, you don't always need to aim for that type of opportunity. Those are very few and far between, right? Think about it. I spend all day, every day, looking into stocks, right? And how many 10x plus stocks since 2019? 3, which is amazing. Like, how many other people have had 3 stocks, 10x or more since 2019, which is incredible. But think about how few and far between those opportunities are. I might be lucky to find one of those opportunities every 2 years, every 3 years. Like, one of those opportunities might come to me every 2 or 3 years. Meanwhile, there's going to be plenty of other opportunities in the market over 2 or 3 years. Like, I could find several stocks, I believe, every 2 to 3 years that will 2x or more, right? Several, not just one, like several. And so those 10x opportunities, man, they are few and far between, and they come with risks. Now, in regards to AMD, it's very important everybody understands what's going on here. Okay, listen. I posted this on my X page here today. If you ever want to follow me on X, it's always linked in the description area of all my videos. You can go on down there. 18 months ago, honestly, I was irrelevant on X, and I think because you guys showing up in my huge YouTube following, like now we're like popping on X. It's unbelievable. We get more views on X now than honestly a lot of Wall Streeters that are like big names on Wall Street. I'm kind of shocked by it. AMD outperformance over Nvidia will get much more extreme the next 18 months, I believe. This shows you since the April lows, AMD stock is around a double up of Nvidia stock performance. You must understand 2026 will be the last huge year of growth for Nvidia, while AMD has 3 to 4 huge growth years ahead. And if you look since those April lows, AMD stock's up 184%, Nvidia stock's up 93%, right? Huge discrepancy. And it used to be the opposite, where Nvidia stock was just blowing away AMD, but everything's obviously shifted and changed this year in a pretty significant way. Now, if we look from January 2023 to January 2025, what do we see here, right? Wall Street bought up Nvidia stock rapidly. The stock went up 800+% from January 23 to January 25. That's unbelievable. AMD stock, on the other hand, went up 81%. It was kind of sleepy. Because if you're a Wall Streeter, right, or even a retail investor, why would you have bought AMD 2023 to 2025 when Nvidia had all the growth, right? Like, this doesn't make sense. Like, AMD's growth rates were not there. Nvidia's growth rates were there. So if you were looking for where the momentum is, where the big opportunity is over the next few years, you should have looked to Nvidia. Like, that's the one that had it, right? It didn't make sense to buy AMD. Like, that's a lagger type stock. Like, it's just not there, right? Now, everything's been flipped completely. If we look at January 2025, so basically the beginning of this year, to now, AMD stock's up 83%, Nvidia stock's up 34%, which, by the way, that's still really good performance. The fact that Nvidia's up 34% is nothing to sneeze at. It's just not even remotely close to AMD's 83% gain, right? But now it's like, if you're a Wall Streeter, if you're big money, why would you buy into Nvidia right now when you know AMD's the one that's going to have way better growth rates in future years? You got to understand, like, Wall Street loves a story where the revenue is going to accelerate, right? Revenue growth rates are accelerating. Nvidia is now in a deceleration cycle they're going to be going into in 26 and then especially in 2027. So if you want the big time growth, you go for AMD. If you want kind of, let's say it's going to be more consistent, smaller growth, that's going to be Nvidia here in future years, right? So that's why AMD continues to see upward pressure on that stock, and people are just buying in. Every sell-off gets bought right up in AMD. Look at what happened what was that, 2 weeks ago? I think it was 2 weeks ago. AMD stock falls to $195. I believe it was on the whole Google situation, right? Google launches some chips. Meta might spend a few $1 billion with them out of a capex that's probably going to $100 billion a year. And so, like, everybody freaked out. They sold Nvidia, they sold AMD. AMD got all the way down to 195, and today it's 221. Like, just like that, boom, in a matter of what, 2 weeks? It's not like the market exploded higher in the last week and a half to 2 weeks. It's just at the end of the day, like, people understand AMD's going higher. And so they buy in, right? If we look at Nvidia's growth rates, they're still going to be stellar next year, right? You're looking at growth rates for these quarters next year anywhere between 40 and 60%, right? Phenomenal, amazing. But the issue is that growth rate is down significantly from where it was a year ago, 2 years ago. And then if you look at 27, you could be talking about growth rates going all the way down to under 20%, right? Which is all of a sudden people are like, ooh, like, what happened to the 100% growth rates in NVIDIA? What happened to the 50% growth rates, 80%, right? And all of a sudden you go to report a 19% revenue growth number, people are going to be looking like, oh boy, is this about the end of the growth cycle in regards to NVIDIA, right? Meanwhile, you look at AMD, and the contrast there is unbelievable. Lisa Su's talking about 35% plus compounded annual growth rate of overall business revenue. But even more importantly, she's talking about a 60% CAGR, compounded annual growth rate for the AI business over the next 3 to 5 years. 60%, ladies and gentlemen. Keep in mind, Lisa Su could be sandbagging a bit here in regards to this number, okay? Don't be surprised. Like, it's very common for AMD to beat whatever analysts have for EPS estimates, revenue estimates. You can look back at the history and look at how many quarters Lisa Su comes in and beats what expectations were. It's incredible, right? So when we talk about this sort of growth rate, I'm sorry, but NVIDIA's compound annual growth rate for their AI business is not even going to be remotely close to these sorts of numbers over the next 3 to 5 years, if we're thinking about 2026 through 2030, right? And so NVIDIA can't report anything close to that, 2026 to 2030. AMD's going to, that's where you're getting the big growth, right? Now, it's also important to understand AMD's AI strategy and how that differs from NVIDIA for 2027 and after, okay? The big thing that AMD's really going to have going for it, okay? You got to understand all these massive companies that are spending fortunes of money right now on the infrastructure, all these chips, okay? Listen. These companies are maxing out their budgets. They don't have much more room after 2026 to up their budgets, their CapEx budgets. Like, they're maxing out. Even with their revenue growth, like, it's been growing so exponentially, like, they're going to have to start flatlining in 27, 28, 29, okay? Which means you have to do more with less. Because it's not like they're going to be like, oh, we don't have to buy chips anymore. They're still going to need the infrastructure, continue to build, but it's not like they can go double up their CapEx again in 26. They can't double it up again in 27. They got to start bringing that numbers down substantially, right? So total cost of ownership becomes very important. And this is where AMD has a great opportunity to win when it comes to efficiency of their chips and being able to do more for less, okay? Also keep in mind, NVIDIA's chips have been phenomenal for training these LLMs. Training has been very important the first few years of this AI cycle, but inference is likely going to be massively bigger long term. Jensen's talked about that, and Lisa Su's talked about that several times. Okay, so you got the NVIDIA CEO and AMD CEO both basically saying, hey, you know what, inference is going to be way bigger, which is the models actually running, right, and not just training them. And so models will always need some level of training. That's always going to be important, but the inference long term is going to be way more important. So think of yourself, if you've used ChatGPT, Gemini, Grok, anything over the last few years here, you're basically like a beta tester, okay? All this questions you're asking and trying to refine the models and whatnot, you're basically the one that's training these things, right? And so inference is going to be way bigger as people get more and more used to using LLMs and AI for different use cases, right? And eventually over time, training is going to be much less important. Just running the models is going to be what's more important, the inference part, right? And that's where AMD has a huge opportunity. Additionally, you think about from the software side, right? NVIDIA's really tried to lock people into the CUDA software. That's been big for them. AMD wants to go, obviously, open source with this. And so if open source becomes much bigger 2027 and after, keep in mind that's going to be a huge opportunity for AMD, right? And we do know open source ends up becoming the bigger thing usually over time in these markets. The initial can be like something in-house. Like think about iOS in the early days of the smartphone industry, right? Like Android was basically like non-existent. What happened over the years though, right? As smartphones became more and more mature, is we watch, obviously, Android take over the market share. That did not mean Apple was doomed or anything like that. They were obviously still incredibly one of the most successful companies in the world, just as Nvidia will continue to be one of the most successful companies in the world. It's just Android was a huge opportunity, and so that's what AMD is going after over time, right? Now, also keep in mind, when we're talking about CPUs plus GPUs and using those together, who's going to be more well-positioned? You're talking about the company that makes arguably the best CPUs in the world with the company that is likely going to have GPUs that are just as strong as Nvidia. There's one company that can really do that for you. So these are all things to kind of factor in there. MI500 series down the road, that's going to be massive for this company, right? Also, keep in mind, this is not the first time AMD has played this game when it comes to stealing away market share. If you look at pre-2017, so let's just think about before 2017, right? Intel dominated the market when it came to CPUs, right? Completely dominated the market, holding nearly 100% server share. I mean, that's insane, right? And what has AMD been doing over the years? Eating into that market share, If we look here, shrinking Intel's dominance from a 9-1 lead in the late 2010s to roughly a 2-1 advantage in mid-2025. No one saw that coming 10 years ago. No one saw that coming, right? And yet it happened. And so now people are of this assumption of like AMD is never going to eat into Nvidia's market share. Like it's impossible to eat into their market share. And I'm looking and I'm like, just wait. Over this next 5 to 10 years, AMD will eat into Nvidia's market share in a substantial way, in my personal opinion. Substantial way. This is not the first rodeo for Lisa Su and that AMD team in regards to eating into a company's market share. Okay. Now, I have 7 figures plus invest into AMD, and I have 0% reason to sell this stock, right? And you got to understand, like, why am I not tempted to cash any shares in any of my portfolios? I can show you exactly why I'm not tempted to sell any shares in any of my portfolios, okay? This is my bull case for AMD. My bull case for AMD has revenue growth a little ahead of what Lisa Su does. Lisa Su's talking about a compound annual growth rate of revenue of 35% plus, right? I did a little more bullish. I did a 40% on average number per year, right? So a little ahead of Lisa Su, which once again, Lisa Su's known for sandbagging her numbers. Look at how many times she comes in and beats Wall Street estimates. Something to keep in mind. So I have them being a little better than what Su's expecting. I have 50% net income growth. I have the net income margins only getting 19%. This is kind of a joke because honestly, and that's why I said this number might be low. In both my bull case and bear case, I only have 19% net income margins. We got Nvidia at like 50%-ish type margins, right? So I might be low here. Just keep that in mind, ladies and gentlemen. Like, it is possible AMD could push those net income margins to a 25 to 27% range. And I have mine not even getting a 20% under my bull case and base case. Keep this in mind. If you've got those sorts of growth rates, 55 to 75 P is very fair for a company in the chip space. That puts the stock in 2029, guess where? Between about $850 and about $1,150. The stock's $220 right now. A $220. My base case, fancy way of saying this is what I expect. I have them doing what Lisa Su thinks they're going to do. 35% revenue growth per year, 26 to 29, right? 45% net income growth. And net income margins, once again, only getting into 19% come 2029, right? And where does the stock end up going to? 2028, stock should be somewhere between about 460 and about 560. And then 2029, we're talking about a stock somewhere between about 670 and $800+, right? So the moral of the story is here, AMD likely has significant upside over the next several years. And so I can't even think about cashing AMD. Like, if AMD was 420 today, I might at least consider cashing some shares because I'm like, okay, the upside might be limited over the next few years. So that might get me to sell, like, let's say AMD was 420 today instead of 220, I might sell half my position or something like that. Or at least maybe 25% of my position I would cash. Because I'd be like, okay, like, there's not as much upside ahead, right? Because if I have the stock getting to somewhere between, let's call it $600 and $800-ish come 2029, there might be better opportunities for me if the stock was 420 today out there, because there might be other opportunities that I think is an easier kind of double up from here, right? Whereas AMD is like a stretch to kind of get a double up from there. But at 220, come on, I can't even, it's not even a consideration. Like, no way, baby. Okay. Alrighty, ladies and gentlemen, before we get into Celsius, the opportunity there, Revolve and Netflix, I want to let you know the pinned comment down there today is if you're looking to apply to my private stock group, private wealth group, access to my private Discord chat, all the moves I'm making in my $3.7 million Fidelity account, access to 1000xstocks.com, all my courses, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, all that good stuff that will be pinned comment down there. We're getting close to closing the group to new members, as in I'm closing it next week. Next week, I'm closing the group to new members. And yeah, that's the deal. Like, it's been overwhelming demand in there, and I want to give my guys a nice break. Got to keep in mind, a lot of the people that work for me are like have multi-millions invested in the market. So those guys need a break, man. They've been on the grind all year, and it's been incredible. But yeah, we're closing the new members next week. So this is the last week to get in there if you want to get in there as a new member. And then we're going to close up shop for quite a while in regards to new members, at least. And obviously the private group always stays open for existing members. But in terms of new members, we're closing up shop next week. So do keep that in mind. Pin comment down there if you want to apply to join us before we close it up. Celsius, next up here. Okay, so Celsius. Listen, $10,000 plus gainer for me here today, setting up to be the next double in the public account. Here's the deal, okay? Ashton Invest posted this on X here today around Wall Street price targets. Wall Street's really starting to back Celsius again in a major way. Analyst price targets in the last 3 months, average looking at 64.23 on the stock. Keep in mind the stock's in the 40s right now, okay? So Wall Street's starting to really get back on the Celsius bandwagon, right? Also, take a peek at this. I don't know if you guys saw this or not. The post only got 1,000 views on X. It seemed like no one looked at it. But this was kind of interesting. Heavy hitter stepped in. They bought $1.6 million worth of in-the-money Celsius calls, expiring the day after Christmas, 12/26. Somebody's betting big on strength into year-end. That was pretty darn intriguing, right? And so in order for somebody to make that big of a move on a stock like Celsius, they got to not only be confident that the stock could show major strength in the year end, but they got to be confident that Celsius stock could see enough momentum that if they needed to sell those calls off to somebody else, somebody would be willing to take those off their hands, right? Just something to factor in there. Now, additionally, this is a rumor. Like, we can't be in the meetings at Red Bull, but there's rumors. I hear little things from little birdies, and I don't know if they're true. I don't know if they're false. I don't know. Just hear little things here and there, okay? But I heard Red Bull is actually really worried about Alani. Alani's been taking off as far as growth rates there. I'm sure probably no one watching this video heard of Alani 2 years ago. And now you're going into almost every major supermarket, every store, Target, everything. And Alani's like starting to become a big brand and like significantly positioned. And I hear from so many of you guys, you go to the gym. I got a gym in my garage, so I don't actually go to the gym. But so many of you guys say you see a lot of people drinking Alani at the gym, including a lot of females as well. So interesting, right? We have an update in regards to market share. Celsius provided an update to investors on Wednesday detailing 2025 brand integration efforts, Alani new direct store delivery transition progress, and recently achieved milestones. The beverage company said more than 80% of Alani new distribution business has been transitioned to Pepsi distribution network as of December 1st. So that was last week. The Alani new integration is on track for completion by the end of the first quarter of 2026. Meanwhile, the Rockstar integration, because now Celsius is Rockstar, which used to be under Pepsi umbrella. Pepsi bought them years ago. Pepsi ran the brand into the ground. Maybe Celsius will be able to bring that brand back to life. If they don't, it's honestly irrelevant. Like, there's only upside in regards to the whole Rockstar situation. But meanwhile, the Rockstar integration plans currently remains on track for completion in the first half of 2026. In terms of the big picture, Celsius noted that the portfolio reached 20.2% market share in the 12-week period ended November 23rd, right around Thanksgiving. That's phenomenal, ladies and gentlemen. Worth now thinking about Celsius as a 20% plus market share company and building and growing. The portfolio grew 25.5% ahead of the energy drink category, which grew 13.7% in the same period. That's what we're talking about, baby. Growing at a more rapid clip here. Now, you got to understand this. I explained this one or two times in the past in regards to Celsius. Everybody has to understand this, okay? You got to think about the competitive landscape. We know this industry is massive, energy drinks, right? We know it's getting bigger. That's something we know. But you got to think about the competitive landscape, and it's changing substantially. You got a gentleman, John, leading Celsius, has basically grown this company from like a nothing, nobody company into a serious competitor in the energy drinks, where now the company as a total has 20% plus market share. Go back 6, 7, 8 years ago, no one would have thought this is possible. No way. It's incredible what he's pulled off, right? But in terms of its competition, you got to understand, Red Bull, the co-founder of Red Bull, he passed away in 2022. Okay, so that competition has been lessened to a greater extent, right? You don't have the big dog there anymore. In regards to Monster, the other Goliath in this industry, right? As far as them, Hilton has taken over the CEO role. Keep in mind, Monster is a company I used to own years ago, made a ton of money on it, even made some money earlier this year on it. But the big money was made like years ago for me on Monster, right? Great company. Like, they were in the prime of their kind of like trajectory, I would call it, back when I owned this company back in the day. Hilton was leading the company with Rodney Sachs. Rodney Sachs has now stepped aside. He stepped aside basically back in the summertime. They're in the wind down of their careers. Let's just call it what it is, right? They're in the wind down of their careers. As far as Hilton's 73 years old now. As far as Rodney Sachs, he's 76 years old, okay? So these are the guys that built Monster into the monster it is. Like, you know, they're just not in the prime of their careers anymore. Like, they're, I don't want to say over the hill, but they're just, you know, they're at that stage, right? And we'll all get there. Like, I'll be there someday, right? And you look at me and you'd be like, oh, Jeremy's 76. Like, he's not quite picking the same quality of stocks he was back when he was 35 or 45 or 55, right? It's just, you know, it's just the way it is, right? And then in terms of competition from like upstarts or things like that, a couple of years ago, people were really worried about Prime. Prime was really pushing into these sorts of spaces. And from what we're hearing, Prime's in bad shape now at this point in time. That brand was so hot 2 or 3 years ago. The guys should have sold it. Logan Paul and KSI, who started, they missed a huge opportunity there. Now it's just a mess, a complete mess from what I'm hearing. And so you don't have that competition either from like the upstarts. So they got everything kind of on lock. They got, you know, the OGs on their way out, and the upstarts are just a disaster, right? So what it ends up being is it's a runway. Like, it's a clear runway, and the skies are blue, and Celsius is right there for to take it. And John, the gentleman leading the company, is in the prime of his career right now. Prime of his career. And so over this next many years, Celsius should continue to grow. As they grow, they'll likely take market share, right? And they can probably get a little price advantage as the years tick on as well. Remember, even a 10 to 20 cent price raise in these products over on a year-over-year basis, it can mean substantial margin uptick, right? And then as you get more international expansion as well, then you have to ask yourself, okay, what do you do with all the money you're going to start generating? Massive share buybacks. So then your earnings per share goes up at a much faster clip than your net income goes up, because you're always taking shares off the market, right? Like, this playbook's been played out before. And so is it impossible for Celsius to be a 20% plus CAGR type returning stock over the next 5-10 years? It's definitely possible. Like, it's no guarantee, but it's definitely very, very possible when you just do the math around it. You just do the math around it, right? So Celsius is looking really, really good. Really, really good. It's a runway, and the runway is clear. Next one up here, RVLV. Then we'll get into Netflix, okay? Revolve. This is a sneaky double up for me, right? 137% the stock has now gone up for me in the public count. It's a $26 stock, right? Now, you gotta understand what's going on with Revolve and where this company's headed, the stock's headed, all that good stuff, okay? Look, even with the tariffs, even with dumpster fire consumer confidence numbers this year, right? Look at the latest quarter Revolve had that they reported a little over a month ago. They still grew revenue on a year-over-year basis, 295 mil, from 283 the previous quarter in the same quarter last year. Gross profit went up at a much faster percentage clip. Gross profit went to 161 million versus 144 million the same quarter last year. Net income went to $21 million from $10 million, a double up in net income there, right? And so Revolve's doing a phenomenal job with the financials of this company. Look at the latest quarter. Look at the cash balance, $350 and $15 million of cash and cash equivalents. This is ridiculous. Like, think about this for a moment. The total liabilities of the company is 261 mil. So the company has more in cash and cash equivalents than they do in total liabilities. How many other companies do you ever see that? It's extremely rare. HNST Honest might be one of the very few that honestly can come to my mind that they might have. And Honest, I'm not even sure, has more cash than liabilities. I can't quite remember. But Revolve is, I'm telling you, one of very few companies that has more in cash and cash equivalents and total liabilities. Ridiculous. Ridiculous, right? Now, the chat for Revolve in the private group is completely dead. It's honestly might be the most dead chat of all the chats. A lot of times it's just Blair talking to himself. Sorry, Blair, like that chat is just dead, right? It's so funny because there's so many other chats in the private group that there's just so many people talking every single day, right? But Revolve is not one of those stocks. Like no one cares about Revolve. No one talks about it, right? And one of our private group members put this, said, I just checked Revolve's website. Their clothes are too expensive. Most people would not want to shop there, right? This is an issue with Revolve and Revolve stock and how things are understood here, right? Is what my audience is 90% male, right? The stock market investors in general, in terms of people that are picking stocks, heavy male demographic, right? Heavy male demographic. My private stock group, heavy male demographic. I think like 90% of our members, or if not 92 or 93% of our members in the private stock group are males, right? And so if people ever even want to look into Revolve, they go to their website and they see something, right? Keep this in mind. Selling expensive stuff is not a bad business model. Louis Vuitton, LVMH, has a $361 billion market cap on it. Ferrari sells, 12,000 cars a year or something like that? Maybe a little over 12,000 cars. And yet, it's a $68 billion market cap. And it has a larger market cap than companies that spend, or that build 10 times the volume, 50 times the volume, 100 times the volume, right? It's incredible. But what happens is, if somebody's doing some research on Revolve, they go to the website. First off, they're like, this isn't interesting to me, because a bunch of dudes and they're like, what, dresses, stuff like this isn't interesting. Like, what's going on here, right? So you see the products, then they click on it and they're like, oh my gosh, $395 for that dress, $995 for that dress, $240 for that dress. What? This is crazy, man. Who's paying that? Then they go to Revolve's other brand called Forward, FWRD, and they look at the prices there and they're like, oh my gosh, they're selling like Birkin bags and all this stuff. And I'm like, what are these prices, right? And so since a lot of retail investors are males, right, and a lot of people that invest in the stock market are males, they look at somebody like Revolve and they're like, I don't get it. Why? Why would they pay all this money for these products? This seems insane, right? Well, I can tell you there's a whole lot of females out there that would have heard that I'm looking to buy an SF90 next year at some point, second half of next year, and be like, that's stupid. Who would pay $400,000 for a car? So what? It gets you to point A to point B. So what? It goes vroom, 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 vroom. Big deal, right? Big deal. Hey, look at that. That's stupid. Why would you spend that much money on that, right? I live in Las Vegas. You know how many guys go stay at the Wynn and Encore and will blow 5, 6, 7 figures at the baccarat tables, the blackjack tables, playing roulette, craps, whatever, on a weekend at the Wynn and Encore? You know how many women would look at that and be like, why? That's so stupid. What are you doing? I don't get it, right? Look at that and be like, that's dumb. Meanwhile, plenty of guys out there like, oh, it sounds like a great time. I want to do that, right? Not everybody is going to understand spending in certain categories, right? So some guy can spend $30,000 on a bottle of wine. $30,000 on a bottle of wine. Somebody that look at that is not a wine drinker and be like, are you mad? $30,000 on a bottle of wine? What are you thinking, right? I got a couple wine coolers at my house, right? My wine coolers probably average prices in the 30s, 30 something dollars a bottle, right? So we're talking about the bottles in my wine fridge are like 0.1% of the cost of a $30,000 bottle, right? You could have 1,000 $30 bottles for the same price as somebody spending $30,000 on a bottle of wine. So you're like, why would you do that, right? Why would you do that? I spent over $200 on this bottle of cologne right here. Somebody might look at that. Why would you? That's stupid. Go buy a $20 bottle of cologne, $30, $40 bottle of cologne, right? I really like this one. I really like this one a whole lot. Joe Malone, I like it. What can I say, right? Listen, people are going to spend a lot of money on things you're not always going to agree with, but you got to understand there's a market for it. You might not be the one to go to the Wynn and Encore and blow $250,000 in a weekend. That's fine. There's plenty of people that are willing to do that, right? And they don't need 1,000 people to go do that in a weekend, right? You might never understand why somebody would spend $30,000 on a bottle of wine. That's fine. You might never understand why somebody would spend $400,000 on a car. That's fine. You might never understand why somebody spent $10 million on a house. That's fine. Like, people are going to spend money on things that doesn't make sense. So when you see a dress selling for $900, you're like, who would spend $900 on a dress? Just understand, there's plenty of women that would gladly spend $900 on a dress. Don't think with such scarcity mentality. And just understand, a business like Revolve has every metric going up in the right direction. Their net income just over doubled up on a year-over-year basis. Their revenues are increasing. Even with this bad consumer, no one has money. Oh, really? Then how did Revolve just do $295 million of revenue last quarter? Last quarter, 3-month span. They're doing around $100 million of revenue per quarter. Seems like those dresses are selling just fine. So, understand, plenty of people will pay for it. Okay, plenty of people will pay for it. Just because you won't spend $900 on a dress doesn't mean somebody else won't. Just because you won't spend $300 on a dress or $5,000 on a handbag doesn't mean somebody else won't. Okay, gotta understand that. It took me a while to understand that as well. And then as the years ticked on, I got older, my net worth increased. I began to understand, okay? And so keep that in mind. Next up here, Netflix. People are asking me, I even saw a lot of people on X asking me, like, what about Netflix? You think it's an opportunity? Let me give my opinion on this, okay? So big news came out here today in the past few hours that now Paramount outbids Netflix for the Warner Brothers Discovery deal, okay? And some sort of like hostile bid where Paramount wants to offer them over $100 billion. Netflix, I think, was willing to offer them $82 billion. It had been approved by the boards. Now Paramount's going in and wants to do a much bigger offer. It's going to be a situation. And so this could push up the price huge because now basically the shareholders could kind of revolt. Like it's going to be a messy situation now. Like really, really messy. Paramount is kind of screwing Netflix big time just by doing this. Like a big time. Because Netflix already looked like it was kind of like a done deal. It might actually end up saving Netflix long term, in my opinion, but it throws a big wrench in this whole situation. It's messy, okay? So here are my thoughts in regards to this whole matter, okay? First up, I said this, I think, to my private stock group on Friday when I first heard about the deal. I said Netflix should have never tried this. It's horrible. I don't know what they're thinking at Netflix. This has got to be this might be the only time Netflix has made a move that I'm like, what are you thinking, guys? Like, this is dumb. This is straight up dumb. Because here's the deal. Netflix going to spend this fortune of money. Imagine how much sports content rights Netflix could buy. Speaking of sports content, that's like where the real money's at, right? Live sports. Netflix could spend so much money on sports content for $82 billion, right? Like, that's ridiculous. And continue to build their ad business up substantially, continue to basically force people to have Netflix if you want to watch live sports, right? It's substantial. Think about how many shows and, different products and movies they could create. It's incredible. And so Netflix should never try to buy this in general, in my opinion. Like it makes them into a messy conglomerate. Like Netflix is a very streamlined business model. It's very simple. You add Warner Brothers Discovery onto this, it complicates things. Now you have all these different properties, and it's like, how much do we spend over here on content versus this other property and HBO and blah, blah, blah. Messy. I don't like the deal in general for Netflix. I think it's bad that they even got into this in the first place, okay? Now, next up here, this will be a huge hang-up on Netflix for probably the next 6 to 18 months. Because now they're going to have to figure out, okay, is Paramount actually going to be able to get through and do some sort of revote here or something, and like Paramount will actually be able to buy them? How's that going to work since the board of directors of both sides have already agreed on this? So then the shareholders are going to kind of revolt. There could be lawsuits involved, because if you're a shareholder and you're like, wait a minute, we can get 100 billion over there instead of 82 billion, we get way more on our shares. Of course you're going to want more money. So that adds a bunch of complexity in regards to the legal side. Now this is going to get even more to the forefront of regulators. And if, let's say, now Paramount is going to, if let's say Netflix is allowed, the board of directors and shareholders still vote, then it still has to get approved from the regulator side. Paramount could spend big money blocking the deal in regards to like lobbying different individuals, and it could get messy on the back end. Very, very messy. Very, very quickly here, which caused a whole bunch. And then Netflix doesn't know what they can spend money on, because now you're going to have a tie-up where you're like, we might spend $82 billion buying this company, right? And now it's like, if Netflix cancels the deal or if regulators don't approve it, I believe, I looked in the deal a little bit, I believe Netflix then has to come out of pocket several $billion. If, this is a big if the deal is blocked by regulators, or I think if Netflix voluntarily cancels a deal. I believe that's how it was structured. I'm not a lawyer, but I know a little something about law, and I believe that's how the deal is structured. So if that happens, like, then Netflix has to pay billions, several $1 billion from what I remember it being. That's ugly. like this is no situation. This is a good deal in my opinion. And it's going to be a huge hang up for Netflix. Now can they bid on sports rights over the next 6 to 18 months? Not really. Like, they don't know how much they can spend on buybacks. Shareholders are looking, and if you're a shareholder, you're thinking about buying Netflix stock. You're like, what am I buying here? Before it was easy. I'm buying Netflix. Now it's like, okay, I'm going to get all these different properties. Maybe not. Some people might want those properties and now be unsure if they're going to get those properties. Some people might not want those properties and be scared to buy it because they're like, I don't want those properties. So Netflix is going to have storm clouds around it for the next 6 to 18 months. What a mess. What a mess. So am I interested in stepping in Netflix? Absolutely not. In my personal opinion, there's just way better opportunities in the market. Like, I can think of a long list of better opportunities. Once this situation's settled, let's say Netflix stock continues to go down all the way to Chinatown, and then this situation's solved, then maybe I step in on Netflix, but not here. It's way too messy. And I really question management's judgment. Like, if I was a Netflix shareholder, I'd be seriously questioning management's judgment that they wanted to even do this deal, knowing how messy this could get. And knowing that it's going to mess up your company, in my opinion. Things are not going to be streamlined. You're going to have all these different components to your business. I don't like it. Netflix was simple before. Now they're going to try to complicate this thing. They're going to have to spend fortunes on lawyers. Oh my gosh. No bueno. So Netflix is a new touch. Alrighty, ladies and gentlemen, remember, think long term. Think about the type of companies, management teams you want to be in for the next number of years, right? We're trying to build portfolios that we're proud of in the 2030s. Not that we're just proud of in 2026. We're trying to build portfolios we're proud of in the 2030s, right? Great companies, great management teams, proven business models, great financial statements at attractive valuations, all that good stuff. Pin comment down there if you're looking to apply to join private stock group, private wealth group, get access to 1000xstocks.com, private Discord chat, all my courses, my entire library of premium courses. Get your Steel membership cards. We have our 1000x Steel membership card right there, baby. We have our beautiful private stock group, which might be my favorite card of all, my Steel card. And then we have only a select few have this card. Can't even show you it all. It's the black card, okay, for lifetime members of the private stock group. Pin comment down there. We are closing to new members next week. So this is the last week to get in. If you want to be a new member of the private group, much love and have a great day.